Hello, Curtis Chambers here with the Chambers Financial Group. Everyone was surprised at the news that GDP declined 1.4% in the first quarter of 2022. As usual, the market seemed to figure it out before the experts. The traditional definition of a recession is 2 quarters of negative GDP growth, although today a recession is more qualitatively defined by economists. Regardless, this is big news, and I'd like to take a couple minutes and look at what it may mean for the markets. The S&P 500 index is now in correction range for the year, and the market faces multiple challenges including the war in Ukraine, the Fed raising interest rates, supply chain disruptions, and inflation. This April was the worst month since March 2020 during the COVID recession, and this has been the worst start to a year since World War II. This is also a midterm election year, which is notable because these years have historically featured large market declines. Statistically, we'll see, in fact, that this year's decline is not unusual. What is ahead? Time will tell, but let's look at where the market has been historically 1 year after the peak pullback in a midterm year. This chart from LPL Research shows the average of all these election years since 1950. Midterm years have historically seen the largest drawdowns of all the years based on a president's term. The average drawdown has been 17%. These years have also posted the greatest rebounds. Returns 1 year after the low in midterm election years have averaged 32%. In this chart, also from LPL Research, we see now each midterm election year since 1950. The red shows the peak pullback during the year. The decline for each of the years looks familiar to what we're experiencing now, and you can see the magnitude of the decline for every year. But where was the market 1 year later? In every case, the market was substantially higher. Double-digit declines during a year are a common occurrence. Fortunately, so have been market recoveries. As LPL equity strategist Jeffrey Bookbinder recently wrote, individual investors have the benefit of time on their side. History shows that patience is rewarded during volatile periods in the market. This looks like one of those times. If you've got questions or concerns about the current market, please do not hesitate to call me or visit our office. You can also find us online at chambersfinancialgroup.com. We're not in it for the short run, not even until after the midterm elections. We're in it for the long term.